And welcome back to Bitcoin Advisor channel. My name is Chris, bringing it to you from Westlake Village, California. We are getting some more rain. Yes, the drought is over, and yes, the Fed came out hawkish yesterday. Yellen came out hawkish yesterday after the conference. She basically said she's not going to bail out the small banks unless they determine that it's a threat of, contagion. And Fed Powell yesterday said, hey, look, the banks, they didn't control their risk, and that's their fault, right? And we all know it's not their fault because, it is their fault, but Powell is artificially engineering a recession. And that's why I'm just going to bring up a couple of tweets here. One from, not TED Talks Macro, actually this one here, 42 Macro. This guy's really smart, Darius Dwight. I'll just play a little clip here for you guys.
I think if I can figure this out, and I'm a pretty smart guy, but I'm certainly not, hundreds of PhD economists, which the Fed has. If I can figure that out, then obviously the Fed understands that, and they know there has to be some economic pain in order to achieve their congressionally mandated price stability objectives. You cannot get to the rate cuts in the QE without the pain. I was going to middle finger, sorry, I wasn't doing that on purpose. But you can't get to the rate cuts in the QE, and I'll skip to my thumb, without the pain first. You need to have private sector money deflation in order to get the public sector money reflation. And there's this two-step process that I think a lot of investors are skipping over.
So private sector deflation, that's the banks deflating in order to get public sector reflation. And that leads to the rate cuts and the stimulus money. So what he's saying is that, look, the pain is not here yet. And to be perfectly honest, that is evident by the stock market. The S&P 500 has not broken down yet, right? And we're looking for the S&P 500 to ultimately come down. The only way to get people to stop spending money is you got to make them feel poor, right? So when the stock market looks like this year, and it's only down, from the high last year, the S&P 500 is down 15%. 15%. That's nothing. It's nothing. So I'm in line with the opinion of Mr. Dwight at 42 Macro that there is more pain to come. We just haven't seen it yet. And that's what will lead to the rate hikes and the rate cuts and the stimulus, because this QE is just kind of the $2 trillion bailout, right? Is just a emergency kind of drawing rights for the banks that supposedly go under, Yellen and Fed Powell, we need a little money and we can have it if we need it for depositor funds that are supposed to have already been there. And what else is kind of going on? Again, Russia is heralding the petro yuan. So the petrodollar is out and the petro yuan is in. And without announcement yesterday, the dollar absolutely got smacked to the downside. And I did put out a short clip yesterday saying, hey, look, as long as the dollar is down, I am expecting Bitcoin to continue the sideways and up rally. And let's just get into some of that price action. So a bit of a bear trap yesterday. I know we were looking at this as an ascending triangle. Just drawing it back out here really quick. So with the breakout right there, we were looking for, very likely a move with a quick spike up to, we actually got the move pretty much up to the 1618 fib. And then by taking out the previous low, that is essentially, a bear trap of all bear traps, a bull trap and then a bear trap on the other side. Breaking back, breaking above the horizontal and then below the diagonal. And now we're back above it. And I would say as long as we can hold this diagonal trend line, the next target up is actually going to be right here at 29,874. As long as, I mean, technically speaking, as long as we do not close a 4-hour back below 27,500, then I'm looking for that to get hit. Additionally, what do we see? Sorry, that's the PMARP. You got 4-hour momentum having a big cross back to the upside. And you see volatility is still expanding. So definitely short term, that's how I'd be trading this on the 4-hour time frame. Let's check out the daily. Something I did note yesterday saying, hey, this is a potential top with one more spike to the upside. You can see momentum is just beginning to wane here and come back down. Excuse me, volatility is just beginning to wane here. So if we do get that one last spike up to the top side, could expect some selling pressure in that zone. However, on the other side, I do want to bring this back up, is the 4-day time frame. And as long as we do not tick below 26,666, what a number, 26,666. As long as we don't tick below there, I'm looking for this one to generally continue the sideways and up rally. And so the question is, when do we get the recession? What is the cause of the recession? And can this stretch all the way up to 32,000? Yes, absolutely. As a matter of fact, that's something to be aware of as well. On the higher term time frames, we're now back after rejecting the bullish control zone. We are back in there, and as long as we are closing the 4-day above 26,155, then 4-day momentum is to the upside as volatility is expanding. So this run could have a bit more legs, and with the dollar absolutely just getting creamed here, just absolutely, looks like it wants to come down again to our 6-month target, which is down at about 99 cents. We called that one out as soon as we tick below there. And these signals can take months to play out. So just be aware of that. Following up on ETH Bitcoin, a lot of people asking, well, when are the altcoins going to start to run? And I do think there is that potential right now on the daily time frame. You can see the ETH Bitcoin pairing, putting in a bit of a buy as momentum is crossed to the upside from the critical zone. Also, let's see. Yeah, you can also use the stochastics for bullish and bearish divergence. That's not typically how I use it, but you can see it plays actually in with this as well. I'm going to get my regular chart on here and make it a little more simple. So what I'm talking about here is this low in accordance with this low. And if we can confirm this as a low with any kind of a daily closure back above 0.65, then ETH Bitcoin pairing. So this is, ETH priced in Bitcoin. That means typically when this goes up, Ethereum's going to start outperforming Bitcoin, and so are a lot of the altcoins. Additionally, Bitcoin dominance, we've been talking about this, saying very similarly to Bitcoin, that putting in a top like this can likely get you one more spike higher, and then the question is, do we roll over? We're seeing this signature right here again, where momentum is just beginning to get to the downside. I'm sorry, volatility is just coming down. Like, let's look at the last 2 times this happened. So this, well, obviously the sell, let's see. Yep. So essentially what you want to see is an inverse move as volatility declines after getting a big upward spike, right? When volatility, this is a mean reversion indicator. So as the Bitcoin dominance goes down, you would see essentially the volatility go down, right? Because the price isn't just shooting straight up. It starts to come down, and that's, essentially when altcoins should run is as Bitcoin dominance goes down slightly. So again, this is not investment advice. This is just what I'm looking at to judge kind of the next bull run in altcoins. The other thing that could happen is, the stock market crashes and altcoins crash and Bitcoin dominance goes up as the price kind of goes sideways and down. So that's something to be aware of as well. And what else did I want to bring up today? I guess I'll just go over gold really quick, as gold is rallying in the face of the crisis here. And, do I like gold as a trade right now? I mean, typically you don't want to buy at the high side of the range. If we do crack above 2,000 an ounce on any kind of a daily or a weekly closure, you can look for a big leg up, a big leg up. And I would say 2360 is in the cards there. 2360 or 2,360. But to put that in perspective, we're talking about a 14% move. Compare that with Bitcoin. And Bitcoin just rallied from the lows here. 78% in how many weeks? Or how many days? We're talking about 86 days, so almost 3 months. Over the last 3 months, 76% run, and from the bottom. And here's the other base case scenario that I am looking at. So if there's more pain to come in the stock market, and I'm going to wrap up this video here quick. My overall kind of analysis after having this huge, let me throw up my other chart here. This huge consolidation up here and a breakdown and multiple drives of bearish divergence, you can come down to the 1618 fib, which is that, $10,000 mark. Doesn't mean we can't rally up a bit higher first. And, possibly all the way up to $40,000. But if we have a major crisis in the markets, what you'll also notice is the monthly trend line. Let's line up this monthly trend line. I guess I'll use this one here. How far back does this go? Maybe we should put it on auto. Is it better seen on a weekly? What trend line? But so huge range for Bitcoin, and that's what we've been saying is, look, if there's another crisis in the stock market, is that a potential? Is that a potential we get some kind of a massive, something like this? Remember, Bitcoin has not quite decoupled. And, where could that come in? Somewhere around July or August. There's a lot left to go in this year. So, this would not surprise me. We fill the gaps on CME up here, and then we fill the gaps down here, and everybody gets sideways and out. But the long-term trajectory is up and to the right, and that is what I like about Bitcoin. And Bitcoin did show himself strong in the face of the banking crisis. People ran to Bitcoin, and I think that's just the start of what we are really looking for, as Bitcoin showing himself as a way to unbank yourself. So all around, this trend line, though, does hold up pretty well right here. On a closing basis, on the weekly time frame. So, based on the 5-day and the 4-day time frame, we are looking at some more upside. If, however, we tick below 26,796, then I'm willing to call that quick move down to 25,000, and I would be looking to accumulate and put in some long positions at that level. That's it out of me today, guys. Hope you have a blessed and highly favored day. I'll be back tomorrow and signing out. Take care.